How you doing? I'm Nick Upton here with Restaurant Finance Monitor at the 2017 RFDC. I'm here with Max Freedman, founding partner of Sands Investment Group. We're talking triple net lease. So tell me a little bit about your company, what you do there, and
Sure.
how you're finding value out there.
Yeah, so we started this company in 2009, and we do national triple net investment sales across the country. We've really tailored our focus to working with tenants, operators, and developers, and helping them finance new projects and hitting the 1031 market to get value.
Oh, great. Yeah, and how are you working with clients these days? Everyone talks about how hot the real estate market is, how expensive
it's definitely
it is.
hot.
But yeah. But so how are you helping them find the right fit for the restaurants?
Sure. I mean, we have come to this conference now for 5 or 6 years, and we've seen the space just grow tremendously.
Yeah.
And I think a lot of it has to do with the change in the climates of the retail market, and you see a lot of capital that were previously chasing big box deals and strip center development, catching on to a single tenant net lease development in fast food. And I think it's just a recession-proof industry, and you're seeing the most velocity happening in that space.
Yeah.
So we've been really focused on working with the tenants, trying to get new creative ways in financing their projects and lowering their occupancy costs.
Wonderful.
And we're doing that mainly through working them direct and doing some self-development.
Okay.
So with rising land costs and where the real estate prices are going in today's market, which are just astronomical, we're having to get a little more creative in finding ways to help these tenants get into business and do new construction projects.
Wonderful. And on that self-development, we talked previously about a lot of these companies doing self-development for the first time. What do you really need to be able to do your own self-development and maybe flip that lease or sell off that piece of dirt for another the next one?
You need a good team. I mean, that's first and foremost. I think a lot of these franchisees are taking the onus on themselves to find GC contacts and actually the development team to put the deal together. But if it's going to save them $10,000, $20,000 a year in rent versus using a third-party developer, they're seeing the value in that over the long term of their business success.
Okay.
So we help them in assembling that team on the front end.
Great.
But mainly we're helping them with the actual financing of the deal by bringing either equity partners to the front side of the deal to help them in financing these projects, or the more important thing, which is using the sale-leaseback market to fund the transaction once they're open and operating in a business.
Wonderful.
And we find that's incredibly useful because they're rolling the equity into the next deal versus having a couple $1 million tied up in just one deal by retaining the real estate. So the real estate component is really the driver that's financing these deals.
Okay, wonderful. And who are these equity partners? What kind of people are waiting in the wing to help out with these deals?
Well, you can certainly go upstairs and find a whole room full of them.
I'm sure.
You're seeing, again, a lot of people crowding the space and people trying to chase deals, whether it's just your commercial banks or just simply family offices or equity placement. People are chasing fast food deals because they're seeing a lot of velocity in this market. And people are just looking for yield, whether it's short-term or long-term. There's a deal to be made with everyone. Wonderful. So we have a variety of different clients that are chasing these deals, and again, it's about finding the right fit with whoever the franchise operator is, the concept, and usually it's based off location and where they are in the country with matching them with someone that's comfortable with the real estate risk.
That makes sense. So I think the last thing I like to ask everyone, but what has changed in the past 5 years for you? I mean, obviously real estate market's a lot different than it was 5 years ago.
That's a good question.
But is there any big changes that you've been watching, and how have you addressed those?
Yeah, I mean, it really ties back to the tenant doing self-development. And that's been the major change that we've seen in this business over the last even 2 years. Historically in the past, it's been, large master plan retail developments or shopping centers with out parcels for each one of the fast food tenants. And that's where the developers really came in as a big value add component, is putting together larger pieces. Today, the game has changed. People are going after what they just call pad site development, which people are entitling and master planning a project and really just spinning off pieces that go to these single tenant users, which are typically your drive-throughs and fast food restaurants. Now that opportunity exists and the land is already entitled, it's opening up the doors for a lot of these tenants to do self-development and utilize their own GC contacts and equity to put together these deals rather than using a third-party developer service. So when we're doing investment sales, we're working with whoever's going to sell the product at the end of the transaction. In the past, that was historically developers. And now we're seeing 60, maybe even 70% of our business coming from tenants.
Wow. Wow, yeah, that's quite a shift, and
it's a big shift.
Nice time to be in the market then, I guess.
Yeah, it definitely is. It's been a great couple of years. We hope that obviously we can help these tenants in growing their businesses, and creating sustainable rents. That's what we really want.
Yeah, that's key, and I think everyone wants that.
Yeah.
Well, thanks so much. Again, Nick Upton here with Restaurant Finance Monitor, here with Max Freedman, founding partner at Sands Investment Group. Thanks so much,
Thanks for having me.